I was going to make that one. Stocks in the U.S. falling today despite news of a bailout package for Spain.
Legendary investor Jim Rogers joining us to explain what all this means for the U.S. and the world economy, dressed in his tropical weight suit for a very good reason. He just got off the plane from the tropics. From
yes,
Singapore.
Yes.
First of all, last time you were here, we talked a little bit about euros, and I brought up the uncomfortable fact that at that time you had some euros. You don't have euros anymore, do you?
No, I sold them. No,
What did you sell them for?
For?
What did you trade them in for?
U.S. dollars.
U.S. dollars.
Yeah, no. I got out of euros. I don't own any euros anymore. I'm not sure.
They're going further south?
I'm not short the euro. Well, they probably will. I probably should short it, but I have no shorts in the euro right now. I moved mainly into the U.S. dollar. Listen, the U.S. dollar is a terribly flawed currency. It's just less flawed than the euro. That's all.
Jim, I had somebody tell me today, I wouldn't be going long on Greek real estate. But at the same time, they do have elections coming up, as does France. The political situation in Germany is a little risque right now. I mean, how are you feeling overall about Europe? Are you worried about it? Or do you think U.S. investors should just kind of let it go by the wayside?
We should be extremely worried about everything right now, Cheryl. Europe's got problems. We're due for a recession next year. We've had recessions every 4 to 6 years since the beginning of the Republic. Next year's 4 to 6 years. 2007 and 8 was worse than 2002 because the debt was so much higher. You wait till the next time. The debt has gone through the roof. 2013 is going to be a mess. You should be very worried.
A recession in the U.S., a recession, Jim.
Yes.
Bearish. Gosh.
Wait.
I thought the lighter suit might have,
no,
changed a little bit.
We've had recessions every 4 to 6 years since the beginning of the Republic. What is so unusual about it? It would be normal. It would be abnormal.
Well, I'll tell you what's unusual about it. We never recovered from the last one. I mean, we never really recovered. Even Ben Bernanke said you can't call this a recovery. That's what's unusual about it, and that's what's really discouraging about it.
Yeah, we've had a lost decade. The Japanese have had 2 lost decades because they kept making mistakes. We're making the same mistakes. I don't particularly
What's the biggest mistake we're making?
We refused to let people go bankrupt. We kept bailing out everybody in sight. And we're ruining the class of people who save and invest. Right now, all the people who did it right, David, saved their money, didn't buy 6 houses, they're getting wiped out.
Well, we just talked to a fixed income investor, and we were asking when we're going to have interest rates above inflation rates, which is the way life should be, correct?
Exactly. Think of all the people that you know who did it right. They're getting wiped out right now. This is insane what's happening in the United States.
Well, the thinking was during the Great Recession, if you will, was that emerging markets were a safer place to go. But last year, even emerging markets, and I know that you cover Asia and you look at that market very closely, especially the Chinese market, was a disappointment in 2011. How are you feeling there?
I'm short emerging markets. I'm long. I own Chinese stocks. But other emerging markets, I'm short. I'm not terribly optimistic about what's happening out there. They got overexploited. I mean, I don't own stocks many places in the world. I'm mainly short stocks. Listen, I don't see good things happening. Again, I don't like saying it, but it's normal to have setbacks along the way, and sometimes in history you've had long periods when nothing happened.
But again, it's those gaps between the recessions where hopefully you grow enough and you innovate enough and enough companies go bankrupt and learn from their mistakes that the overall economy is healthier after recession. That's why the bailouts are so unhealthy for our society.
Exactly. They're not letting it work the way it's supposed to. It's supposed to be you have a forest fire, you clean out the underbrush, the dead wood, and you start over. We've had a forest fire, but they don't let anybody burn.
By the way, is Europe a bigger concern in your mind than a slowdown in China?
Oh, yeah, much. The debt.
Why?
Because China's the largest creditor nation in the world. They've saved a lot of money for a rainy day. When it starts raining in China, they got something to do about it. Here we don't have any reserves, and in Europe they've got huge debts. No. Europe is a much bigger economy than China.
Yeah.
But China's in much better shape. Doesn't mean China won't suffer.
I'm not giving up, Jim. I'm not giving up. You were known for your commodities calls. Goldman Sachs says commodities are going to go up 29% over the next 12 months. What do you say?
Then I must be wrong. I can't believe I'm agreeing with Goldman Sachs. I'm long commodities, I'm long currencies, and short stocks.
Anything specific in commodities you like?
Mainly, I own them all, but I'm mainly long agriculture.
Long agriculture.
More bullish on agriculture.
Moo, you like MOO, the ETF?
I don't know. I use the Rogers Index myself.
I found something that Jim Rogers liked. I just want to point that out.
Oh, okay.
I like a lot of stuff. I like a lot of stuff.
You like your children?
I like my children.
And you love Singapore?
I like agriculture. I like Singapore. I like the U.S. dollar.
Okay.
Jim,
For now.
For the moment.
Jim Rogers, great to see you.
Nice to see you.
Thanks very much.